joining us in our last Ramadan night with new venture capital funds. And today it's our privilege to have with us Stephanie Nour Prince, partner of Network and Operations, and Sarah Abu Risheh, both partners at Nuwa Venture Capital. And we're thrilled to have, after our last session, which was two ladies leading an impact fund out of Jordan, and after many sessions with mostly men VCs, to round it out with two women is another great success. And so welcome, ladies, and thank you so much for joining us.
Thank you for having us, Omar.
Yeah.
And maybe we'll start by quickly giving the audience a little bit of your background, how you got to becoming a VC today. And we can start with Stephanie and then go on to Sarah.
Sure. So I started on the opposite end of the table, I would say. I started on the operator side. My first job was as part of a startup before moving on to WAMDA, where I spent about 7 years. I focused a lot on leading our ecosystem building activities. So a lot of the events that we were hosting, the programs, and then towards the tail end of that was working very closely with the fund. And that translated into deal sourcing and focusing on our stakeholder engagements.
Amazing. We were in the same building for a number of years. So
we were,
and I'm thrilled to see that you're now a venture capitalist. So congratulations.
Thank you.
And Sarah, please.
So yeah, my experience started, I moved to Dubai about 10 years ago. I was in consulting for 3 years at Ernst & Young. After that, I joined WAMDA for around 6 years. I was part of the investment team there for 6 years. I've also led WAMDA X, which is a early stage accelerator, the second cohort, before joining Nuwa and starting off with Khalid and Stephanie. So yeah, my background has been in finance, consulting, and then it moved to venture capital for the past 7 years. Yeah.
Amazing. Congratulations. And it sounds like with Khalid also being ex-WAMDA, that this is kind of like an ex-WAMDA new fund. But that's great. I think this is the kind of impact anyways that we should be looking for from organizations that go on to graduate leadership that go on to lead their own institutions. So I see this as a credit, of course, to yourselves and a success story for the ecosystem. So, well, look, tell us a little bit more about Nuwa. What is the fund all about? What kind of deals are you looking to do? What's the thesis of the fund? If you can talk to us a little bit more about that, and we can start again with you, Stephanie, if you'd like.
Sure. So I'll cover part of that. So we launched in February of 2020. So we sort of launched at the same time that the pandemic launched. It was interesting timing for us. The fund's target is $100 million. I think one of the very interesting things we had going for us is that we've all previously worked together. And so we kind of veered into working remotely and really hustling from the get-go, right at the onset of the pandemic. We've done our first close on the last day of the last quarter of 2020. So we worked really hard and really fast last year.
So you were fundraising throughout the pandemic?
We were fundraising throughout the pandemic, yeah.
Was the pandemic positive or negative for the fundraising effort?
So look, I mean, it was quite the experience because it's never, it's not what you'd expect it to be. I mean, fundraising and building these relationships with your prospective LPs is typically something that takes time. These are offline relationships that you build because these partnerships are deep, very long-lasting partnerships. So I wouldn't say that it was easy to do this online. It doesn't translate very easily online, but thankfully, I think our thinking was very much focused on what we can do together with our stakeholders to support the ecosystem. And I think we were very privileged to be able to build these relationships with our current investors, and who are really organizations that want to build these kind of mindful, want to be mindful about how they work with founders and want to build meaningful relationships with them.
Okay. And so maybe, Sarah, you can tell us a little bit more about the types of deals you're looking for, maybe even the sectors, deal size, certainly for any entrepreneurs to understand if they would be a good fit for your fund.
So yeah, so we wanted to cover the life cycle of a company. So we do deals from seed to B. So our fund allows us to go through every stage. We have a bit of a focus on the ABs, but we are quite bullish on seeds, especially in the market today, because as everybody knows, the market is exploding everywhere, in Egypt, in Saudi, in all of the GCC and all of the Levant.
Exploding in a good or a bad way?
In a good way, yeah. So it's like, there's companies starting up every day. The pandemic pushed people to go digital. So it's been really positive for the ecosystem as a whole. And you're seeing a lot of startups at the seed stage that are starting off, and we want to be part of that story from the start. So we want to be able to cover from seed and then follow on in A's and B's. But we do have a focus on A's and B's as well as individuals. Like we could start in a company at an A or a B level.
And so,
yeah, so
what does that translate to into ticket sizes? Like we're talking seed $250,000 up to B, like 5 or 10 million?
So yeah, I think we would do from 200,000, maybe 100,000 up to 5-6 million in a company. So that's kind of ticket sizes we're looking at. And usually what happens is that you'll start, these will be like a total of 6 million over the life cycle of the fund as you follow on in different rounds.
Okay, interesting. And are there specific sectors that you're looking at and you're excited about? And I would love to hear about specific sectors that you're bearish on, that you're like, this is overplayed, it's done, I'm not investing in another X again.
Yeah. So in terms of sectors we like fintech a lot, and fintech across different industries, because today fintech is not just a fintech company. It's you see it across different industries. You see it in marketplaces, you see it in e-commerce, you see it in logistics, you see it everywhere. So it's kind of embedded itself everywhere. So we like to invest in fintech just across different industries. We also like SaaS. So anything in SaaS that's also across industries, that's booming in the region. And the business model is sticky, and it's the revenue and like the margins on the business models are really good. Third, we like private label e-commerce and marketplaces. So we like vertical niche e-commerce that companies that or marketplaces that have their own brands. So that's something we're really bullish on. We see it expanding in the region, and we've actually invested in 2 companies today that are doing that. So these are kind of the sectors we like. On things that we're kind of shying away from.
I would say, add one bit. Sorry, Sarah.
Go ahead.
I'd also add one bit. I think if you notice, Omar, we sort of look at it not just as industries, but really also as models. I think there's models we've seen kind of mature in the last few years and really become not pervasive, but a bit more, there's more activity, I would say, in these models across the region. The last one is not a model per se, but you'll see some patterns there. So it's what we're calling rapidly digitizing industries. So it's essentially your typical
fintech, health tech, med tech.
Yeah, so it's been a bit maybe slow to digitize for various reasons. It's maybe there are too many big players, or it's heavily regulated, and it could be anything. It could be prop tech for real estate, and like you said, fintech for financial services. So that's something that we're very interested in as well. So what we're not interested in.
Tell us what you're bearish on, Stephanie. Or Sarah.
Yeah.
Yeah. So so what Stephanie, like just to add on to what Stephanie said, so you could see like in health tech, like a fintech company starting something in health tech. So it's all kind of converging into one actually at the end of the day. But but these are the type of sectors we like, things we don't like. We're not so bullish on last mile. We think that's been kind of like last mile delivery. I think that's been, margins are too thin, and it's crowded. So I say that's something we're a bit, we don't really like to do. Another one would be horizontal marketplaces, because I think that's been done, that's been won. Amazon's doing it, Nour's doing it. Like if somebody comes in the market, like you would have to really question the model. So I think these are two we wouldn't really dig deeper into. I don't know if Stephanie think others.
Yeah, Stephanie, any others, and also any if you could tell us a little bit about the geographies of focus as well, Stephanie.
Sure. So no, in terms of those that we're kind of, not that we dislike, but we think have been overplayed. I think I definitely agree with Sarah. In terms of markets, so we cover obviously MENA and the GCC, but we're also interested in Pakistan, East Africa, and potentially Turkey as well.
Okay, interesting. And we are starting to see Arab companies move into Africa, right? With like Visita's push into Africa as a potential growth plan. I think there's a really compelling argument to be made there.
Yeah, absolutely. And Visita is not the only one. I think, if I'm not mistaken, PayMob also.
Okay. They just did it. They just raised like 18 million or something, right? Last week.
Yeah.
Okay, interesting. So, well, with so many new funds being launched, what really makes Nuwa unique? What is your differentiating factor? Let there be light.
There we go.
Let there be light. I can really joke and show you my setup here. My lights.
Oh wow!
Omar was very creative with the setup, but I have to say it worked out very well. I think lighting was very good.
Thanks. So tell us about what makes this fund unique, and perhaps also maybe we can understand a little bit about your relationship with Faisaliya Group.
Sure. So I'll start off by maybe explaining a little bit the premise behind Nuwa. So we've been working. So Sarah, Khalid, and I have been working in the space for about a decade. So we've been very privileged to see the ecosystem kind of flex and grow and go through different periods of challenges and have new opportunities pop up. One thing that I think we notice, and is kind of stagnant, is that value doesn't scale easily unless you're an Andreessen Horowitz and you can afford to hire a number of operators to support your portfolio companies. It's very tricky to be able to offer that value beyond the financial investment. And so the way we've structured it for us is twofold. I briefly touched upon it earlier, but so actually first we launched with a network of area specific experts. So these are either founders or operational experts across various areas. So all of these areas are matched to pain points that founders go through. So hiring, navigating a legal framework regionally, which can be quite difficult, figuring out your tech stack, your tech product, your tech team. So all these things. But on a second level, which I think is very interesting for us, is the relationships we have with our own stakeholders who are, so our pool of investors is a mix. We have corporate investors, we have family offices, and we have some funds of funds. For the corporate investors and family offices, these are entities that have been at the forefront of building up their respective industries in the last few decades, I would say. So there's a lot of expertise that we can pull in from that. There's a lot of access we can pull in from that. But they also, as they digitize, they want to find meaningful ways to work with founders that we back. So there's a lot for us to unpack in that sense. Our relationship with Al Faisaliya, so Al Faisaliya is our anchor investor, and we've been working with them since the very beginning.
Okay, and is there any involvement beyond as an LP, as a strategic, or is it similar to basically what you were saying, that many of your LPs could be potential strategics, and this is one of the unique selling points of the fund?
Yeah, so like Al Faisaliya anchored us, trusted us. They were the first ones to give us the first check. So that's how Nuwa started, based on their trust in us, in the three of us. And today they are part of like the IC, but as other LPs are as well. So yeah, they are an investor, like an LP. That's
okay.
the relationship.
Great, great. Thank you, ladies, for answering all those questions and for giving us a good idea of the fund. I'm going to switch gears a little bit into the quick question part of our interview today. And I would invite our attendees to also ask any questions in the Q&A box. We just had one question come up, but we're going to hopefully get some more. But in the meanwhile, I'll pepper you with some quick, short answer questions. And let's start with the first one. What is the #1 challenge that entrepreneurs underestimate in building or growing their company? So, go.
Fundraising.
Fundraising. And
yeah.
Can you give us a little bit more on that? Like just how long it is, how difficult, or any other color that you can?
The length of the process, I would say.
Okay,
yeah.
Great. Stephanie?
I could say two things. I think hiring is something that's underestimated. I think it would be very difficult, to not to hire too fast, to make sure that you've got the right talent on board. And I would also say it's a hustle. It's not your glamorous journey that you can choose to take. It's a hustle. So the strain in general of running a business that takes over your life.
Yes. This I know very well. This is like something that they should put as a disclaimer, in the fine print. Anyone who's signing up on a startup should get that disclaimer. You give up your right to life and social life. And okay, another thing. What do you believe is the biggest challenge facing the regional startup ecosystem today? And I'll give you some options. You can always pick other and just give us maybe a one-liner on why you think this is a key challenge. Challenges are talent, funding, regulation, market size or access to customers, or others. And we'll start with you, Stephanie, this time, and then move over to Sarah.
I'd pick hiring from that. I think access to talent is tricky.
And are there any particular things that you think we're having problems with, or you've seen entrepreneurs struggle with in terms of talent?
I think particularly when you're looking at a senior level, when your startups, reach a certain stage and you want to kind of buff up your leadership team, I think that becomes a little bit tricky. It's very natural that some people, the people who were there from the very beginning, sometimes they're not necessarily the people who will grow into the positions they need to be in, such as CTO, CFO, and that's very natural, that happens. But hiring someone to come in and take leadership on that front, sometimes it's very difficult to source that person.
Yes, and then they make quite a splash when they come in. So you could have them, you could find yourself losing a lot of people, bringing a new boss, right?
That's true, yeah.
Sarah?
I agree on the hiring. I think hiring, I contemplated between regulation and hiring, but I think hiring is a bigger struggle. Regulation is easing, especially in the region and in some sectors. So I would choose hiring as well.
And do you see that as a late stage problem or as early stage as well? You see challenges, especially as you were working on Wamda X, so you were dealing with a lot of early stage startups.
I think a lot of the struggles come in the beginning when someone is trying to find a co-founder, either technical or operational, and because he or she are not don't have that skill, and they would need that to scale. And I think that's where the issue really lies, that it's very hard to find talent that would be a co-founder per se, like somebody who is the caliber of a co-founder. think that's one of the hardest things for a sole founder to deal with. Not to say that everyone wants a co-founder. A lot of people want to do it by themselves, and that's fine. But you end up having to get somebody very senior that gets to like a co-founder level at some point as a company scales, because you can't do it on your own, and that's been proven over like many different companies.
Yeah, I'll say I've clearly in my mind have that TechCrunch article on unicorns that they did ages ago when they coined, or when the term unicorn was first coming out. And they said average team has 2 or 3 founders of a successful unicorn. Their age is 38 and they've worked a previous job together, or they went to college together. And so it's great to see you guys having worked together in a previous opportunity. That's what makes a really strong, compelling team able to build a new opportunity. So, okay, next question. What's a common mistake that entrepreneurs often make when approaching investors? Okay. Who you want to start, Stephanie?
Stephanie.
I feel like we're going to agree on this one. And I think sometimes, it could come from just the, like your outreach, trying to really talk to as many VCs as possible. I'd say 2 things. I'd say not doing your research to really know what this investor typically invests in, what they, who they back. And then the second one is, I think, trying to build that relationship a bit too late. I think some people, all founders do it, but a number of founders do it, where they start building a relationship with you right at the time of a raise. I think it'd be good, I generally think by the time you're raising, you should know the investor should know you. It would be easier for you to approach them then.
I love this. Plant your seeds early.
Yeah.
I think
Sarah.
that's important. I would say like a lot of founders come in very like focused on terms, when a lot of the time it's really about the relationship you build in the first meeting instead of what the terms are, because the terms negotiable, and that's something that everything is negotiable. And people get some founders get a bit worried, like edgy around terms, and they like negotiating terms, and they get like a bit offish on that. But I think that a lot of the times, if you build the relationship and you really connect with the people in the VC, everything can work. And that's something very important for a founder to know, because it could not fit the mandate. It could not be in the criteria. It could not be the right stage. But at the end of the day, if we like you, there's a big chance we're going to invest in you.
We're going to throw all the rules out, but
yeah,
I like that,
like it happens.
Make sure in
yeah,
your first meeting to make an impression, right? Get the hook in.
Yeah, and don't like stress on the little things, because these things are changeable.
Okay, great. Sarah, we're going to stay with you for the next question. Tell us about an investment that you made on that you lost money on, or about a project that you did that didn't succeed, and one lesson that you learned from this failure.
I can't name the companies, but I'll say, so do you want me to say what I learned from the failure?
Yeah, that's the most important thing. Maybe, and since you can't talk about the company, just tell us a little bit about like why you think it ended up failing, if it doesn't reveal too much, and then what you learned from it.
Look, like when you invest in a company, you really believe in them, and as you really believe, you have full conviction as a team, and you don't want that conviction to want that conviction to falter. So then, as you I think what was a mistake and a learning is that we keep believing in the founder and following on, and that's where the losses are made. While if you took your loss from the first time, you thought you had a question mark about a company, then you would have really lessened the losses. So I think it's hard to name a company and say this is a learning from that, but just in general, when we believe in a founder, we believe all the way, and we keep following on, hoping for survival. However, as life goes, like companies fail, and we're in an industry where companies are failing every day, and we invest in 5 out of 1,000 companies. So it's how the world works. But
sometimes
yeah,
you gotta pull the plug. You can't let that startup stay in a coma forever. You just have to
but it's a very hard decision to make, because you believed in them in the start, and you will stay, like, you will keep believing as on every single round, on every bridge, on every like survival line that you want to give. So yeah, I don't know if that like answers the question, but
it definitely answers the question beautifully too, because it shows exactly the challenge of that issue. Really, it's about believing and being attached, and finding that maybe the right thing, but maybe what if, but just this one, but maybe the next one will be their break.
Yeah, exactly.
Stephanie, what about you? Tell us about a time that you invested and lost, or you failed, and what you learned.
So it wouldn't be an investment, but it's my experience at, so my first job I joined, I was, I think, the 3rd employee in a startup that was trying to do, was trying to be like your converged telecommunications platform. So a bit like Twilio, a bit like other stuff at the same time, had great potential, might have been a bit early, but had great potential, good team, good setup. And I think what we did is we focused on trying to build out all the modules at the same time. So I think our focus was a bit off on this. And that was very, 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 very early on, Omar. Like, we weren't even calling it a startup. It was a project. So the word hadn't come about yet. But I think it's a lesson that kind of, directs a lot of my thinking today. We were really trying to build out everything at the same time.
Okay, focus, prioritization, and knowing when to call it quits. I think both great lessons. I want to ask you one more question, then I'm going to take questions from the audience. What is one thing that would make you immediately dismiss a startup? Be like, nope, thank you, no thank you. Whether it's something about the company or the founders, the pitch, but a kind of a red flag or a red line for you that startups should be aware
of. I think people coming in, like some companies come in with very, very high valuations, I would say, like that are like really nowhere near the comparable mark or anywhere near that. But it's not really like a no-go, because you can always have a conversation around that. I don't know what's like a real no-go. I think like something out of our market, maybe like something completely like unfamiliar with. I think that would be like, look, we don't invest in Brazil.
Okay.
You know what I mean? So
any
like,
notes on this one?
Yeah.
Oh, sorry.
Yeah, go ahead.
Yeah, I mean, it's not as transactional as we're not, we're no longer going to talk to you, or we're not interested. I think there's always something for us to look at, or some piece of feedback to give if we've had a conversation. I think those that I wouldn't use the word dismiss, but those that we pass on are those that very clearly are not within our mandate. So there's no use wasting the founder's time trying to pitch to us, where that time could be used elsewhere. I think otherwise everything else, it's a relationship that you're building with the founder. So there's nothing that really makes you dismiss it initially. Sometimes, like you said, first impressions are important, but sometimes first impressions can be very off because the founder is very stressed, or some things go wrong in that meeting. So you can't really be dismissive. You have to invest the time initially before you invest your capital.
Okay, great. Ladies, thank you. Thank you for running with me with these questions. It's been fun, and thank you for great answers. We're going to take a couple of questions from our audience. So the first question by Anonymous, it's a bit long and has many sub-questions. I think some of them we've answered, some of them we haven't. But how can startups reach you to pitch and walk you through their deck? Do you require or prefer VC intros? I think that's a good one. How long is the process on your side from intro meeting to money in the bank? And then ticket size range and sectors we already covered, so we won't go return to that. But let's talk about how long from pitch to money in the bank you think, especially since you talked about how long it is. Entrepreneurs underestimate how long it takes. And what about VC intros? Do you require VC intros? Are you okay with the cold email? Or what do you advise entrepreneurs to do to warm up that intro that they're getting to?
Okay, so on the first one, on the length, it depends on the stage and what type of security is it. So if it is a convertible note or a seed stage, it takes a lot. It's much faster than it would take for an A or a B, because you have to. The founders know that there's a lot of legals that come into play, and that's not only in the VC's hands. It's third parties are there, and people are waiting on people, and it takes a lot longer. So I would say for a seed company, from the first conversation until deployment, could be done between 6 to 8 weeks. However, for an A and a B, maybe a B, depends how many VCs are coming in, then it could take up to 3 months, maybe 3.5, depending, of course, on other parties. And if it's a convertible note and not like a quick bridge round, it could be done in 2-3 weeks. Yeah.
Okay. And then Stephanie, if you'd like to add to that, and also anything about how to warm up the relationship. You mentioned the importance of the warm relationship. Build it before you need it. And how do you, if you can't get a VC intro, how do you warm the relationship?
So I think just to answer the question on do we require VC intros, I think sometimes it just makes it a bit easier to kind of pierce through. And the reason behind that is because the VC that's entering you knows what we invest in, so they'll potentially choose to introduce us to companies that really fit our mandate. They know that there could be some interest from our side, but it's definitely not required. I think we get pitches all the time that are just cold emails, people reaching out to us, trying to get trying to pitch to us, and we've taken those calls. We try to be, it's not very easy because we're a small team, but we try to be as approachable as possible. So sometimes it does take us a bit of time to get back to people. So we're sorry about that if you've pitched to us, but we do go through every single deck that is sent to us. Now, if you really want to make sure that you send us something that we, take some time to look at it, make sure that you send us the right amount of information. We sometimes, it's easy for a founder to think that they want to reach out to a particular investor, but they're not going to share a deck first, or they're not going to share too much about the business. I think for us, it's important to know, what we're getting into if we want to have a conversation with you, to see if it makes sense to take some of your time and get to know your company a bit more. I see that there's a question about a sweet spot for how long a startup should have been up and running before it approaches us. I'm going to start off on that one because I know the person who's asked the question is a good friend of mine, Jude. So there's... And
you get a smile too in the last one, just for you.
So Jude is an ex-colleague of mine and one of the most fantastic people I've had the chance to work with. So I'm glad to see that Jude's working on something there. There's no sweet spot for how long a company should have been up and running. I think we tend to see it more, what type of traction have you generated? Has there been, substantial traction to showcase that, to prove that what you're working on, there's a need for it in the industry? I don't know, Sarah, if you want to add something to that.
Yeah, so I don't think there's, I don't think it's about how long. It's more about where you are in development. I would say launching, showing something to the investor. It depends on the investor also. Like, are we? Do they invest pre-seed? Do they invest seed? If you're coming to them at seed and they only do Bs, then it doesn't make sense. But depends on the investor.
Great.
Yeah.
And yeah, he had another question about any thoughts on the drop shipping industry.
We like drop ships. especially like what's been happening around the world in terms of fulfillment centers, in terms of the disruption of logistics in that space specifically. So we are seeing a lot happening in the dropshipping, and especially on the logistics side that automates fulfillment. And I think that's really interesting. What's going on there, and we're seeing some action in the region in that sector specifically. If you don't do medtech at all, no, we do healthcare. We have some focus on healthcare, so that's something we're interested in.
Any specific opportunities that you see in the health space that are underserved?
Underserved. I think almost everything is underserved.
Yeah, or like any low-hanging fruit opportunities, like why hasn't anyone does X or Y?
Yeah, e-pharma, telemedicine is very underserved here. It's like the models similar to PillPack in the US are like subscription where you can order subscription meds online. These are very underserved in the region, and I think that regulation has a big part here to play, and we would like to see some changes, and there are changes happening. But yeah, it is still to grow. It is still to boom.
What about Edtech? Any interesting spaces within Edtech that you think are underserved or interesting? After
the pandemic, I think Edtech became like one of the core pieces for most funds after we've seen everything go digital. Schools, everyone's studying online. So yeah, we like Edtech. We see a big opportunity in education moving online. We're seeing a lot in tutoring, online tutoring, across the board, even software for educational institutions, so software that caters to a lot of students being on the platform at the same time and not having difficulties through that. Yeah.
Great. Ladies, this brings us to the end of our questions and also the end of our time together. I really appreciate you taking the time to join us tonight and for sharing your insights. We're super excited for you and your new fund and wish you the best of luck. And we hope we're able to give a bit more insights to our audience about Nuwa, the thesis, direction, and I hope you'll have a chance to connect with Stephanie, with Sarah, and thank you everyone for joining us. This is the end of our Ramadan series with new funds. We're really excited about this. We are planning on continuing it after Ramadan. Once things settle down after Eid, we will get back to everyone. We're going to probably extend this beyond the old funds, beyond new funds into some of the older funds and their new initiatives. But it's been a tremendous honor for me to interview you ladies and the investors. I thank you and I thank the audience, and I wish everyone a good night and a happy Eid next week or this week, in a couple of days.
Yeah, this week.
Thank you, Omar,
for having us. Eid Mubarak.
Thank you. Thank you. Eid Mubarak. Thank you for hosting us.
Bye. Bye-bye.
Thank you to our audience. Good night, everyone.